What's going on, guys? This is Matt Marinoff, Real Estate Recovery Group. And, I'm looking at my buddy Bill's face, and he doesn't have a lot on top. He's got a lot on his beard. I don't have a lot down here, and I have his beard on top of my head. So I'm happy to have Bill McCafferty on today because here's a guy who's been in business, has been around the business for a very long time. We actually run in very similar circles, even though he's in the note industry. Very small industry itself, distressed real estate or real estate. So, if you don't know him, you might want to start following him on Facebook. I'm going to give you a little more information about who he is. Bill's actually an asset manager, and one of the companies that he runs is People's Mortgage Relief II LLC, better known as PMR II. Bill is a true skilled building manager, management of portfolio non-performing property assets and making them reperforming. This guy's been in the business for 15 years, continuously looking to grow, expand his network, not only in his little niche market where he's at, but all around the country. To me, that's pretty impressive. He absolutely enjoys what he does as far as working with other investors and helping them obtain and making non-performing assets reperforming and or helping them with the sale, which I'm going to let him, sale of notes, which I'm going to let him talk about. Bill has managed well over 1,000 reperforming, non-performing second mortgages. He has a different niche, or some people say niche, in the industry. I wouldn't really want to go after seconds. If anything, I would try to go after the first. So he's going to talk a little bit today about seconds, and then we might have another guest on in the next week or two, and they might be talking about firsts. But we'll definitely talk about that as well. He assists the homeowners and essentially going from A to Z, because most people don't really know what their options are. That's why I'm a huge supporter of Bill and what he does, because he lets people know what their options are. Foreclosure doesn't necessarily have to be an option in the note market. Okay, so he's working with people obviously around the United States, and helping homeowners actually keep their home, which is tremendous. Bill specializes in building simple procedures, he has processes in place and systems that allows him to manage the assets through the attorneys, the borrowers, the note portfolios, the loan servicers, all across the country. So without further ado, Bill McCafferty. Bill, thank you so much for coming on today. I really appreciate it.
Hi, Matt. Thanks for having me on, man. Looking forward to it. Highly respect you and what you do. And, glad we crossed paths years back.
Yep.
And thankful that you're having me on here today, brother.
I think that in the time that we're in right now, the era of people flipping out about the forbearances, the deferments, what Freddie Mac, Fannie Mae is talking about, what they're not talking about people that might have already been delinquent before in their mortgages, what's not available, what they actually have to offer, because it is an investor guideline that even though they don't qualify for something, which personally I think is ridiculous.
Absolutely.
Rip the freaking Band-Aid off. You've
Yep.
already had 2 loan modifications. Or you see, you've already had a modification. You've already had 3, or you had a failed mod. You went it to 1 and you completed it, and now you're back at losing out again. Rip the Band-Aid off. I think that there's certain things that they should have changed since the mortgage meltdown 2007, 2008. I would love one day to actually go before Congress and talk about changing a couple of bills. But I don't think they want somebody like me, because I throw a lot of the F-bombs around. And I don't know if I can control it. And I don't know how fast the FCC is with their beep, 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 beep. So I want to talk a little bit about how you got into this side of the business. And let's do a deep dive, because I want people to understand basically what you did. And I'm calling it on-the-job training. Explain to guests your story, how you ended up where you are today with your experiences.
Absolutely, brother. So, fresh out of college, I had a sociology, criminal justice degree. Got a job taking care of athletic facilities at a school for court-committed kids between the ages of 13 and 18. Loved the job. Was actually there 15 total years. In about year 10, which would have brought me to about 2005, kind of hit a wall. Told myself if this was it in life, I kind of cheated myself. I had an okay salary. I had good benefits, good job security. But the upside just wasn't there. Working 40 to 50 hours a week. My wife was also working 40 hours a week. And I started doing some real deep soul searching. And I just told myself, you need to figure something out. Get out of your comfort zone and go figure it out. Sitting around in 2005, I saw one of those late night infomercials on buying real estate with no money down. So I started investigating real estate. 2005 and 2006, I started going to local RIAs, real estate investment groups. And I was just setting out to meet people and to try to figure something out. I always knew in the back of my mind, no matter what you want to do or where you want to go in life, the best bet for you to do is to find somebody that is truly doing the business and is actually making money and is successful in that business. So like a lot of real estate investors, in 2006, I bought my first rental property. Between 2006 and 2011, which, I had no idea that I was going to start buying a bunch of over leveraged real estate in the height of the market. I was just a new guy, bought some rentals, did some rehabs. Some worked out, some didn't. Bought some beach houses down in Texas. 2009, Hurricane Ike came in and wiped everything out. I had a lot of good stuff happen and I had a lot of bad stuff happen. I learned that lenders, really don't care about you. They just want to get paid. I learned a lot about insurance companies when the houses got wiped out down in Texas. I did some subdivision. Whenever Bill McCafferty goes into something, he goes full tilt and he doesn't go light about it. He goes full and he goes heavy. And that's what I did. I leveraged some business lines of credit. I had like 14 houses at one time with all mortgages on them. And then all of a sudden the market crashed. Things didn't work out with a few joint ventures that I did. When the market crashed, I was over leveraged. Tenants stopped paying. I couldn't access lines of credit anymore. And all of a sudden, Bill McCafferty was involved in way too much stuff, and the stuff was not good. It was ugly. But at the same time, in 2007, I met some investors that were starting to buy non-performing institutional residential second mortgages on properties. I got to know those investors. Those investors eventually became my mentor. So at the same time, there was a lot of junk going on. I started, diving into that business. I bought my first reperforming and I bought my first non-performing second around 2008 and 2009. I had success with both of them. With everything else that was going on, I saw the opportunity and I kind of ran with that. So probably by like 2012, 2013, I got rid of all my properties, except for I own one rental in Coatesville, and I have my primary residence. But moving from 2009 into 2010, I started buying more of these non-performing seconds. And I got good at working them out. I was trained by a very seasoned group of investors, Partners for Payment Relief, Dave Van Horn, John Sweeney, Bob Pollis, three great guys. I owe them everything. I always make sure people know that that's who trained me. Very thankful that I crossed paths. It was actually funny. I actually sat at the table when John Sweeney came down to a Delaware County RIA looking for some partners to invest in these distressed seconds. So I actually, I always say, was I at the right place at the right time? Or did I take massive action? Probably a combination of both. Right place, right time. But I took massive action. I really set out. I wanted to better my life. and I wanted to take this, I wanted to take control of my life. So in 2011, I finally took the plunge. I left my 9-to-5 job after 15 years. I was in a partnership with an individual for about a year, eventually moved on from that partnership, dove into a partnership with 2 other individuals. And from 2012 to 2013, that's when things really took off. We created our own fund, and we also had an asset management company. I would manage assets for investors that were looking to buy seconds, but didn't know what to do with them. So they would hire me to manage their second. I would manage the whole component between the attorney, the homeowner, the servicer, anything that needed to be managed to get that thing resolved. So I started getting really good at it. But as 2013 came to an end, the partners were just at different levels in business. My 2 partners were younger than me. They could do a lot more sacrificing. I had a wife and 2 kids, and it was about right now I had to make it happen. So we separated at the end of 2013. I got bought out of the fund, went back to my house, started managing these seconds for clients. And as you said, I managed well over 1,000 of these seconds for probably over 100 different investors. But at the end of the day, it's about your why. And that's what it's always been about for me. I got 2 kids and a wife. I want to give them the best life that they can live. I want to support them, and I want to take care of them. And as this thing started really taking off, it was about getting my wife out of teaching. In 2015, we got her out of teaching. I wanted that 40 and 50 hours a week in my own house. She was coming home at the end of the day tired, dealing with administration, parents, and kids all day. And, we weren't giving the kids the time and the effort that they need. And that's where we're at today. I'm a full-time note investor. Also have an asset management company like we're talking about. But I've been through a lot of junk. I think most successful note investors or real estate investors or even business people in general, there's a lot of mistakes and a lot of horror stories behind the success. We stomach a lot, we deal with a lot, and there's nothing easy about it. But that's what this is. Life is not easy. Crazy times right now, and just keep plugging along. That's my story, brother.
Well, it's an amazing story, and it's very well said. And you can hear the passion in your voice. Also, some of the sorrow. I'm sure there's a lot of heartbreak. But unfortunately, it's part of the journey.
That's it, man. There's nothing easy about it, brother.
What would you consider your role would be with somebody that has a non-performing assets? What is, I guess, what does PMR II, what do you guys do? I mean,
no, absolutely. So just so everybody knows where the 2 came from. When I left my partners, we had a company, People's Mortgage Relief, and that's who did the asset management. So when I left, it was just easier to put a 2 on it, and it made it a little cleaner to split. It wasn't as, all of a sudden I have a different name. It was just easier. So that's where PMR II came from. So PMR II, I consider myself an asset manager. It's just a fancy term. I used to be called the workout guy or the guy that works out seconds. But I do a lot more than just working out seconds. I'm a component. I'm a hired service. I'm a vendor. So, a note investor buys a delinquent second, a non-performing second, and they hire me. And, I can kind of do as much as they want me to do. I can handle the whole avenue of helping board the file with the servicer, hiring attorneys to handle the foreclosure process, managing the borrower, managing the loss mitigation, which is helping them resolve it. Like you said, go through their options with them so they know what they do, what they need to do and what they can do. Because at the end of the day, as a note investor, I want to get a payoff or I want a performing asset. But there's so much more to this. I mean, we deal with a lot of bankruptcy. I deal with short sales. I deal with sheriff sales. I deal with everything that goes along with real estate, REOs, evictions. But my main goal is to resolve it with the homeowner, help them out, keep them in the property, make sure my investor, my client is happy. I work off of a commission service fee base in that company. PMR II does not own any assets, and PMR II does not have any debt, and it doesn't owe any money. It operates on a very, very small amount of money every month, but it does very well. I've been doing it for well over 10 years, the asset management company. Right now, I manage about 112 non-performing notes. There's a couple first in there, but majority of them are seconds. And my true skill is non-performing seconds because you deal with the homeowners a lot more with the non-performing seconds.
What do you do in a situation if somebody reaches out to you and asks you about doing a short sale on a property? How do you guys work that out? And this is a good question. Do you have to accept a short sale?
We don't. How I handle it is, majority of the time, we have the foreclosure process moving along with our non-performing second. Mm-hmm. So there is pressure on a homeowner to make a decision or figure something out. A lot of investors get into this space and they want to create the exits. There's only 3 exits, and the homeowner is going to decide what exit to pick it. They're going to either want to pay us, they're going to file bankruptcy, or we're going to exit through the property, which, is a short sale. So they come to me and they say they want to do a short sale. That's great. What's the status of the first? Is the first being paid on? Is the first non-performing? Is the first going to be looking for a full payoff? Is there equity in the property? So let's just say in this scenario, homeowner is not paying on the first either. Maybe we thought they were paying on the first, and then all of a sudden they stopped paying on it. Or sometimes in this business, the first mortgage status is unknown. We take a lot of chances. So when they come to me and they want to do a short sale, I tell them it's up to them to hire a broker or somebody to handle the short sale. It could be an attorney. It could be a broker. It could be a short sale specialist. It could be somebody like yourself. I want contact with that person. I need to see a listing agreement, and I need to see it active on the MLS, and I need contact with the person that has the most to lose in the transaction. And that's usually the agent, the broker, short sale specialist, or attorney. I don't want to deal with the homeowner during a short sale because it's a very emotional aspect of the business.
Can you give us an example of something that might have happened over the course of the past year that you would consider a win-win for the homeowner and a win-win for the investor?
Do you want me to talk about short sale or just something in general?
Talk about if somebody is approaching you to actually do a short sale on the note.
Yeah, so there's actually one closing today in New York. We're getting $9,000 for the second. I think we're probably getting out about whole. Probably not making any money, but not losing any money either. We started the foreclosure process in New York last year on this second. We thought there was equity in the property, but what ends up happening sometimes is, a homeowner it may appear that the homeowner owes $300,000 on a loan balance, mm-hmm. but all of a sudden, when the cards get laid out, there's $100,000 of a deferred interest or deferred principal balance on the back end that we never saw. So in this particular short sale, when the homeowner got in touch with me, I told them what I just shared with you. So I eventually ended up dealing with the person that's handling the short sale. Told them I need to see a listing agreement. I need to see it active. And we can go back and forth all day, but get me the most amount of money that you can get on my second that I'm owed $70K for. Do the best you can and get me the most you can. And I can't get final approval until I see that final HUD-1 or that final statement when you're ready to close after you have a buyer. Because everything else before that is just going back and forth. And I don't have a lot of time to waste. So
walk me through this one. So this is a $70,000 second. And can you, I mean, not disclosing address or anything, can you disclose on maybe what the second was purchased for or no?
Like I said, we probably got out whole. We got 9,000 out of this short sale. We probably got out whole.
Okay, so $9,000. How long was that second floating around for?
It was bought in a pool. So I think the last payment on it might have been like 2013.
Wow.
Yeah, so I'm not positive how long it's been floating around. I have a feeling other people discovered the deferred balance on the back end. Some of my clients buy these things in pools. When you buy them in pools, you take the good, the bad, and the ugly.
I was going to say that, yeah.
And you kind of have to make it all work. And it's what I was telling you earlier. It's always about the portfolio rather than the deal itself. And, at the end of the day, we want to help homeowners get out of the situation, but, we also need to take care of ourselves. So, on this particular deal, the first settlement sheet that I saw was giving us close to 13 grand.
Mm-hmm.
So my strategy from my end is I play a game where I wait for the final settlement sheet to get thrown at me. And then I come back with, as you know, when a first is taking a bath and they're accepting a lot less than what they're owed, they're going to dictate everything. They're going to dictate the settlement. They're going to dictate the HUD-1. And pretty much what they tell you you're going to get is what you're going to get out of the transaction.
I know a lot of first mortgages have insurance policies in place. They don't talk about it. The news never brings it up. In a situation like that, are you allowed to put in an insurance claim on a second or no?
I've never done for a short sale. There's tons of stories where that has happened. Sometimes it worked out for us, sometimes it hasn't.
Mm-hmm. No, I mean, that's important because some people don't know. I mean, I'm self-taught.
Yep.
When I got into the industry, there was nothing really that was out there that was appealing to me, that made it easy for me as the path that I wanted to follow. I did have collection experience. I was absolutely horrendous at collecting because I had a heart, but I was really good at skip tracing people and finding people. So I had a niche for myself for doing that, which was great. So, I mean, obviously you have to have somewhat of a heart to be in this type of industry. But there's also a lot of people that are in this industry that don't have a heart. So I appreciate that you give me just a little insight on the second mortgages. Now, what happens if the first doesn't approve and say that they'll allow you to get a certain dollar amount? Are you legally bound to actually have to do a short sale?
Nah, we don't have to. So how I play the game is I go back to them and, this particular deal, the 13 grand ended up becoming 3 grand on the final HUD-1.
Oh, wow.
So, so I just come back to them and say, we'll take the 3 grand for the short sale, but somebody needs to pay my second down before the short sale for $15,000.
Right.
And I leave it at that.
Right.
And I go quiet.
Right.
So back and forth negotiation. The reality is there's realtors getting commission, homeowners were getting a fee to walk away.
Mm-hmm.
There's money to be played with. But I don't attack people's commissions and that. I have a real good carbon copy email that I send back to the person that has the most to lose, giving them some ideas and letting them know where we're at with it. So negotiating back and forth, they came up with another 6 grand for me. Before the transaction, we accepted the 3 and we're closing it today.
Okay.
So the goal as an asset manager and a note investor when it comes down to short sales is don't get greedy. Try to get yourself out whole. If you lose a little bit of money, it's okay. If you make a little bit of money, that's great. But it's about trying to get your money out. And it's the hardest thing as a distressed second mortgage note investor is to read the writing on the wall and to know when to cut your ties and to know when to get the deal done and move on. That there's no other money there but the 9 grand. You could sit there and play hardball, but that's it.
Can you legally go after somebody? I know different states are different. Can you legally go after somebody and say to them, hey, we're going to go after you for a deficiency, or we'll release the lien for X, but we're going to come after you for the difference?
Yeah, I personally don't do that. My strategy is to get paid off the property, even though a homeowner may pay me. In my agreements, it's real clear that once I get my $9,000, they're done. They can walk away. I'm not coming after them. That's it. I'm not into that. I have a feeling that some people probably get away with it, but most of the people, you got to sleep at night in this business, man.
Mm-hmm.
And, to go after deficiency judgments and start tapping into people's bank accounts, that's not me, and I can't do that. I'm sure there's other investors that do that, but that's just something I don't personally do. Now, New York is a different a state than every other state in the country. And sometimes it's cheaper to go that route than actually go through the foreclosure process. But at the end of the day, I don't want to be doing that. That's just me.
Okay. Well, here's another question. What happens in a situation? I'm writing these down as you're talking because this is important. What happens in a situation where they owe $100,000 and you take $10,000? Are you allowed to report to the credit bureau that the loan was paid in full?
I'm sure you can. I always just any homeowner that comes to me about stuff like that, I just tell them to mail all 3 credit bureaus and send them in the payoff agreement and that you satisfied the loan. I try not to get involved with reporting anything to the credit bureaus or getting involved in that.
So there would be a way where they could actually dispute it.
Absolutely.
And you wouldn't even, like, whatever, it's fine.
Yep.
What about these people that write on the back of the checks and say, by cashing this check, you consider my loan to be paid in full from the original loan amount? Once the check gets cashed, you're, unfortunately, by writing that on the back of that check, that is considered a legal document. Would you guys not fight it, just cash and say whatever?
Yeah, I mean, the transaction's done. We're moving on. They're moving on. Anything they need from me to help them get their things settled with the credit bureaus. I'm not out to beat people up or hurt people.
Would the original note holder or the investor who purchased it at a discount, would he even care?
No.
So why don't credit bureaus, why don't lenders or banks say, look, let's do the short sale, don't file bankruptcy, and we'll actually mark your credit report paid in full? Why would somebody not want to do that?
It's what you said. I don't think most people know what all their options truly are. And, when you're dealing with big banks and you're dealing with big lenders, you're dealing with 9 to 5 people, and you're not dealing with people that can make decisions. I mean, you know how hard that is from your business. And I know you guys are really good at it to get to the people that make the decisions, but it's like in my business dealing with the first mortgage. People would be very surprised how little bit of contact and conversation you actually have with a first mortgage, because you get nowhere without an authorization from the homeowner. And majority of the time you're dealing with 9 to 5 people that can't make decisions and can't think outside the box. And it's like this, how come Bill McCafferty's been able to do what he's done over the last 15 years in his own house? That's all, it's crazy.
So, at the end of the day, we have lenders that do try to force, deficiencies. There was a short sale that I worked on. I'm probably going to go back 3 years, and it was a nightmare. And the homeowner had purchased a property out of state in their name, not in a trust, not in a family member's name, whatever it is, lied on his application, said that he wasn't holding any other assets, that he didn't own. You already know where I'm headed with this. And essentially he lied. By lying on the documentation, they really should have shut the short sale down for fraud, but they didn't. But what they did do is they slapped a deficiency on him for $115,000, which was a hell of a lot less than really what the loan was. And they could have pulled any number out of their ass. It could have been $69, $6,900, whatever it was. But I do remember that it was about $115,000, and I said the guy has no money. And the person alluded to on the other side of the line, are you sure he doesn't own any other assets? So I was like, this isn't good. And I said, because obviously I'm on a recorded line, which I didn't know. And I asked the gentleman, do you have any other assets? He said, no. And I said, well, now would be the time to tell me the truth and not effing lie to me, because they want to slap you with $115,000 deficiency. They can't do that. They can do whatever they want. So you lied on your application and you stated that you had no other assets or that you weren't tied in, and they found an asset. So tell me the truth. He says, I bought a house, and I'm just going to say out of state, cash, and they did a title search on the property. They saw there's no mortgage on it. So guess what? Now you're liable for $115,000. He goes, well, I can't do that. And I says, you can't? So we had to actually go back and negotiate. And, you know, I was able to get around it because of the stupidity of what this person did. And I don't like the word stupid. I would say misguided.
Yep.
You should have put the property in a trust, some type of vehicle that it wouldn't have been picked up, but it was. He only had to pay $5,000, and the $5,000 had to be paid at closing. You think this guy would have wanted to drive up 15 hours and kiss my ass? He was like, well, you know, that's your job. And I said, no, that was not part of my job. You committed fraud on your application where it said you hold other assets. You made me indirectly part of fraud. So I had no choice. I had to negotiate it down. Otherwise, the transaction wasn't going to go through. Got it done. The investor was happy. The homeowner was happy. I was able to get an additional fee from the homeowner because I was like, listen, this is not going to be easy. And I had to go back and forth for a good week. And I was able to prove that, yes, he owns an asset. And yes, the property was purchased. I'm not going to go into the details of it, but I will tell you that it was a real nail biter, and the guy should have been a little bit more appreciative of what we did and what the investor did purchasing the property. And this particular property, the investor would not allow real estate commissions to be sourced as a type of payment. They would not allow any type of contribution from the buyer. You know, so it was very tight. They were almost squeezing this guy to prove a point. And not for nothing, but they could have taken the property back. There was an oil contamination that actually needed to be cleaned up. And the oil contamination, I think, cost 2 to 3 times the dollar amount that was originally allotted. So I caution people all the time, like, if you're going to take a property, you're going to buy a note or whatever it is, you know, do your due diligence.
Yep.
And be safe, because you never really know. So that could have been a situation where maybe we could have established some type of baseline with the credit reporting bureau and said, okay, look, you want 115, you're going after for a deficiency, you want 5. Hey, what if I got him up to 10? Will you say that the loan is paid in full? Who knows? Maybe they would have done it.
Yep.
It's like a unicorn that's out there. And if you don't ask about it, if you don't reference it, you don't know if it's going to happen. So I asked for some wild stuff over the last 15 years. Do you have any stories, wild stories of somebody's want to actually move forward and actually do something on a second?
Oh, absolutely. So real quick, so if a first is not accepting less on a short sale and we're just being asked to take a discount, it's a different type of negotiation there. I don't have to accept any certain amount. It's all negotiable.
Right.
And I will tell you this, if I'm dealing with a short sale person and I can link the short sale person and the buyer together, it's a whole new game too. Because that means the buyer is getting a good deal and the short sale person may be working with them.
Right.
And it's not just about the homeowner getting out to move on. It's about the buyer getting a good deal. So it's a different ball game then and there.
Mm-hmm.
And I can get a lot more out of a short sale and play hardball that way. But now I have all kinds of good stories. I mean, my main goal is to resolve these with the homeowners, let them share in the discount a little bit. Maybe somebody owes 20 grand in back payments. We accept 10 grand and we wipe away the other 10. We redo their loan balance. We put them in a lower payment. We put them in a lower interest rate. And when we try to make it work for them. I mean, tons of good stories.
What would you consider if somebody was to ask you to explain to them what is a non-performing second mortgage?
So a non-performing, first of all, the difference between a first mortgage and a second mortgage is just when it is taken out and recorded in the county records. So somebody takes out a mortgage, it gets recorded in 2006. That's the first mortgage. They take out a second mortgage. They take out another mortgage in 2008. That gets recorded in the county. That's now a second mortgage. That's really what separates the difference between a first and a second. The definition of a non-performing mortgage is a homeowner going 90 days delinquent on their mortgage note. It could be 90 days or more, but 90 days is the threshold for something to be considered non-performing, delinquent, not being paid on. So that's technically what defines a non-performing mortgage. A non-performing second is that second mortgage. They stop paying on it. It is now 90 days delinquent. In this business, we see everything that hasn't been paid on in the last 10 years. I mean, it's all over the place.
So my next question, I think, is an important question because I think there's a lot of fallacy reports, or there's a lot of people that are misguided on second mortgages. Can a second mortgage foreclose?
Absolutely. So, there might be a few exceptions, but pretty much every state, when I go through a foreclosure sale, I can absolutely foreclose from the second mortgage position if the first is being paid on or if the first is not being paid on. I can foreclose from the second mortgage position. So when I go to a sheriff's sale, I bid on what I'm owed on my second mortgage. If I'm owed 50 grand on a second mortgage, I can bid anywhere from $1 all the way up to $50,000 or anywhere in between. I bid subject to the first mortgage. So when I go through the foreclosure sale, maybe I get bought out by an investor, but if I don't and I get on the other side, the first is still in check. The first does not have to be paid off at the sheriff's sale. The first needs to be addressed, and if the first is not addressed, they can foreclose on me or the homeowner. The first always has to be dealt with. Now, if I start my foreclosure and the first is already foreclosing, I'm behind the first. I can reinstate the first and bring the first current, and now I'm the one controlling the foreclosure. But that's pretty much how it goes.
So why would somebody not want to take possession of a second mortgage? And if the first is, let's say, 30,000 behind, and let's say you're foreclosing on your second, so maybe you're into it, I'm just using round numbers, 10,000. Then it's 30,000 on the first as a rearage. Now you're into it for 40,000. Now are you really controlling the first at that point?
There's so many different levels to the second mortgage business. And it depends where you are as an investor. And it also depends where you are with your capital. I work assets for investors that want properties. And I have investors that don't care about reinstating first and taking control and getting possession of the property. I also work assets for a lot of investors like myself, where in a deal like that, I would rather take my 30 grand and buy more seconds. And let me see what happens with this deal. Maybe I can get a short sale out of it. Maybe the homeowner does a loan mod with the first mortgage. Maybe the homeowner files bankruptcy and we're both involved in the bankruptcy plan.
Mm-hmm.
Sometimes you just have to let the second and the deal work itself out. But I'm a big believer in, on an example like that, I would take my 30 grand and play the game with another 2 seconds. Maybe I buy a reperforming second. I learned long ago not to throw money at deals to try to resolve them. But like I said, I work deals for big investors too that would love to reinstate that, would love to foreclose, evict, and get possession of the property.
Right.
That's not my style. I'd rather, like I said, let me just see how the deal works out with me just being 15 in the deal.
Mm-hmm.
If I get wiped, I get wiped. That happens in this business. It's not fun. But if you're playing the game and you're a true investor, you write that off, you move on, and you keep playing.
But what do you have besides, your company right now? Do you have any other companies besides your current company?
Yeah, so I always just want to let everybody know what really truly separates me from a lot of people that are in this business is not only do I have my asset management company, but I have my own portfolio, and I also do this business myself. I own a bunch of second mortgages, reperforming and non-performing. I have my own investors back in my portfolio. So I do it both. I do it full time. I'm a real note investor doing it full time, but I also have the asset management company. Just last year, I also put out an education program on second mortgage notes. So just trying to stay relevant. As much as I'm stuck in one niche and one real estate thing, I do feel like I'm somewhat diverse with my different companies and what they offer and what they do. I take a lot of pride in that. I have a lot of experience, and I'm not a big hedge fund, and I don't owe a lot of money. So when the market shifted here with the COVID-19 thing, a lot of people were scrambling. Not once have I ever felt like I'm going under in the last few months. I tapped into some of the government money, just kind of slowed things down, did some other things. But I'm not feeding a big fund every month. In my own portfolio, I do things called collateral assignments, and I also sell note partials. Note partials are, Bill McCafferty owns a reperforming second. Homeowner owes him 200 payments of $300. An investor comes to me with 15 grand, 20 grand. I sell them a stream of payments off that. So maybe they get 60 or 70 payments of that asset. I own the back 150 or 130 payments. I still own the asset, but the investor now gets a payment stream for 50, 70 payments. Maybe doing a quick math, they get like a 10 or 12% return on their money, a yield on their money. But I take that 15 or 20 grand and I now deploy it again. That's kind of how I play the game in my own portfolio. A collateral assignment is more of using a reperforming second as collateral to borrow more money. So the difference between a collateral assignment and a note partial is a note partial, I'm paying back principal and interest to that investor every single month. So after the 50 or 70 of payments, I don't owe that investor any more money. Collateral assignment, I may borrow 20 grand and use my reperforming as collateral, but I do a promissory note for 2 or 3 years. They get 2 or 3 years of interest-only payments, and I owe them their principal back at the end of the term. So that's kind of how I leverage my portfolio without borrowing a lot of funds.
Ladies and gentlemen, if you're listening to this later on at one of the podcasts, Bill McCafferty, it's People's Mortgage Relief 2 LLC. You can reach out to him at 484-356-4128. And that number is 484-356-4128. Or you can email him at mortgagepayhelp@gmail.com. Again, his email address is mortgagepayhelp@gmail.com. Bill, your story is amazing because you had so much, you lost so much, you've gained so much. You telling your story before, you could tell, like, there's more of a passion than anything else. You're not looking to foreclose on people. You're looking to help people that want to buy second non-performing assets, make them reperforming again, and give them an opportunity where they can, I guess, invest their money and utilize your company for the service side. If somebody was to reach out to you, Bill, and I don't want to put you in a hot seat, and they want to know more about the industry, and they have money, and they want you to help them deploy the funds to the assets, are you willing to do that with new clients?
I do, man. What I like to do is I like to educate people. I share with them what the business really is. I share every level with this business. It comes down to, are you a passive or active investor?
Mm-hmm.
What's your risk tolerance? Everybody likes the upside and the returns on non-performing seconds, but there's a lot of money to be lost, and it's not for everybody.
Right.
Maybe you want to buy reperforming. Maybe you want to buy a partial or do a collateral assignment.
Mm-hmm.
I know a few funds in the business that, you can get some decent returns on your money by just investing in a fund and being very passive. I like to just educate the person, and then they can decide where they want to go and what they want to do. I've always been about not shoving my services down people's throat. I want to educate you, share my story, and if I can help you out, great. But I know after we talk, you're going to know what the business is and what's out there.
Now, you mentioned early on, which I didn't know, you have a class or a course?
I did. I launched Note Fortunes, second mortgage, note business education program. Right now, it's still in the early stages. It's 11 modules, 13 hours of content, 6-month support group, and I call it my note business toolkit, all my documents, spreadsheets, and all that stuff. Right now, it's just $997, but we're going to eventually go to phase 2 here, which is probably going to be a little more hands-on coaching, and it's going to cost a little more than $1,000.
So I just put on your screen there something blopped up there for you to write a message where it says here. Write the course name and the website, and for the closing couple of minutes, I'll throw up on the screen if people want to entertain and look at it and see if it's something that they're interested in getting involved in.
Yep.
Not everybody wants to pay for the education. I'm fine. They just want to give money, and they just want to get a service provider who understands the ins and outs of a specific craft, which is fine. I deal with all walks of life people. Yes, I do mentor people. Yes, I would say I do have training. Yes, we are working on an online portal right now because of COVID-19. It shut down a lot of my classes. And obviously, we want to be able to offer additional solutions during the COVID-19 period. I'm hoping to have my book out in the next couple of months. And I am going to actually probably have a blurb in there about COVID-19 and put some predictions in the book. And if they don't come true, then it's a flop. If it does come true, then, I work for Dionne Warwick Psychic Hotline, and you should be coming to me for all your your insight on what the market's going to be at a later date.
Absolutely. So I threw two links up. The one's a direct sign up to the actual course, and the other one's a ClickFunnels marketing webinar. It's a little bit of a sales pitchy thing. It's not 100% me, but it is what it is. So definitely reach out to me. I can tell you more about it. I can get you the outline of the course, and I can tell you a lot more about it. I'm all over social media: Facebook, LinkedIn, Instagram. I have a Facebook. I have a YouTube channel that I put up free content all the time. please subscribe to that. I think that's very beneficial and people will get a lot out of that. And that's free.
So these are the two different things that you're offering. And guys, I'm going to leave this up so it's pre-recorded. We don't take these things down. But for people that are listening to this as a podcast, there's a course sign-up page, and it's Fortunes. So it's www.notefortunes.com/go, correct?
You got it, brother.
So it's www.notefortunes.com/go. That's a sign up where you can find out some information. And then he also has a free marketing webinar sign up where you can go in and you can register if you want to learn more about Bill directly.
Yep.
And that's www.notefortunes.com/webinar-registration. Not an underscore, not underline. It's an actual dash, a line in between. So if you're interested in finding out more about the free marketing webinar sign up, it's www.notefortunes.com/webinar-registration. Bill, do you have anything that you want to add for the last couple of minutes, or maybe something that we didn't cover that you might want to add?
I always I have a motto that I like to share with everybody. Everybody wants to know what the secret sauce is for any business or to be successful. And Matt will appreciate this, and I know he does it every single day. It's all about what I consider called LFDA. It's laser focused daily activity. That's it, man. Put your 10,000 hours in, get focused, learn what doesn't make you money, learn what makes you money, concentrate and put the time in on a daily basis. It's all about the compound effect, and it's about doing it every single day, over and over and over again. There's no magic ingredients. Even in my second mortgage business, you're not going to come in and get rich overnight. You need to put your time in. You need to learn it. It's all about LFDA.
It's funny. I have this thing behind me on my wall. You can probably barely see it. And that's a piece of paper. And it talks about success and it talks about failure. And it's usually two routes that people take. They either take, okay, this is success, or it's going to be failure. And unfortunately, people buy courses, they do nothing with it. They try it, they see it's too hard. My philosophy is, look, and I know you're like this too, Bill. Talk to me, get a little an idea, a concept of who I am prior to purchasing.
Absolutely.
Follow me a little bit. Maybe when my book comes out, read my book. I don't know how much it's going to cost, but it's not going to be more than $20, I don't think. So for $20, save yourself a lot of time, a lot of aggravation, and say, look, is Matt Marinoff somebody I want to do business with? Is Bill McCafferty, is he somebody I want to do business with? So I think it's important. Your course sign-up page is www.notefortunes.com/go, and the webinar, you have a free marketing webinar sign up, notefortunes.com/webinar-registration. And I'm going to leave this stuff up. So if you do follow me later on a podcast and you do come across my live streams, you'll see this information. You can always Google Bill, and this will probably pop up as an interview that's up there. I don't take any of these things down. Some of the guys that are in the industry say, you should only leave things up for a certain time and build urgency. Well, the thing is that not everybody knows about Matt Marinoff and who I am. Maybe at a later date, but as of right now, it's okay. Leave it up there. Let people see what's out there, and let them make a decision whether or not they actually want to do business with you. Bill, I appreciate you coming on the show today.
Yeah, man. Thank you, man. I had a great time. Always, brother. Absolutely, man. Always like delivering content and letting people know what I'm up to. That's what it's all about, man. Sharing your story and sharing your experiences with people.
That's it. I'm a firm believer of people before profit. I'm a firm believer of I don't have competition, only opportunity that's out there. And I know you're like that too. And I think if more people were like that, we would be in a better world than we are right now. And I just hope everybody's staying safe during the time frame that we're in. Bill, at the end of every show, I ask people to try to emulate my finger point, and I want to see if you can do it. Bring up your hand just a little bit. I can't see it. There you go. Perfect.
Dude, come on, man. I know the finger point, dude. I know you to a T, brother.
I'm gonna give you an 8. You couldn't see it, but you pulled it up. It was dead on balls accurate. Guys, Tuesday, Wednesdays, and Thursdays, I'm doing these live because I want people to understand there's people of interest out there that want to show other people and educate them. It's not always about making the money. It's about, trying to do the right thing and showing others that there are other people out there that even during the COVID time, people are busy. I know real estate agents are out there busy, but I also know a lot of real estate agents that are not busy and they're actually depressed with what's going on. So the purpose of the 12 o'clock show is to allow people to escape, and have lunch and learn. You bring your own lunch, you bring your own beverage, and I'm here with the learning. So Bill McCafferty, everybody, thank you so much for coming on. And hopefully I'll see you soon once this COVID-19 crap goes away.
Nah, man, stay safe out there, people. Definitely crazy times right now. No doubt, man.
100%. All right, guys, remember, it's not known to get a restraining order. Bill McCafferty was my guest today. Thank you so much. Bill, hold on one sec. Let me get off the air.